Aloha, everybody, and welcome back to the Wall Street Coach podcast. My name is Kim Ann Curtin, and I'm very excited today to have Chris Lanzilotti here with me from Investors Underground. Hello, Chris, and welcome to my podcast.
Thank you, Kim, and hello to you. Aloha. I've been practicing on the way over here, but yeah, it's great to talk with you.
It's such a pleasure to have you here. We've been in each other's kind of periphery for a long time, so this is really great to just have an opportunity to, get to know you more, share your wisdom with my listeners. I feel you have such a straight from the hip approach. You never try to make things sound more complicated than they need to be, which not everybody's very good at, Chris. So well done in doing that. What do you attribute that to? Your ability to take things that are complex and bring them down to earth.
Well, thank you. I have a little bit of a teaching background. Growing up, I had a couple of different jobs where I was writing training platforms or training programs, and I was a martial arts instructor. And so I had a lot of kind of like random jobs throughout the years where I had to take something that was, quite complex and try to explain it to a very broad audience. And so it really helped me to just take the ideas that I had in my head and to be able to simplify them as much as possible. And I'll tell you what, in school, it was sometimes difficult for me to like get papers or other things like to the proper length because I cut everything down so much. I make it like as succinct as possible that that was a struggle sometimes. But thank you for saying that. I really do I like taking complex ideas and making them simple.
It's so funny because school in so many ways is really there. It should be there to prepare us for real life. And, we live in a world with people who have very short attention spans, and yet they're probably giving you a low grade because of the skill set. They're like, just make it 1,000 words. You're like, well, who the hell wants to read 1,000 words if it could be in 250?
Yes, absolutely. And also a person who I really admire is Charlie Munger. He's since passed on, but he was known for that of taking, a very long explanation or a very broad concept and just, down to a couple of words or a couple of key phrases. And I really love that.
It's, I know this is a little bit of a tangent, but it's just so great that you spoke to Charlie Munger because he had this very kind of Midwestern simplicity about him. And he was such a genius. And yet I felt like, I could sit at a table and just shoot, the common, current events with him because he had this comfort within himself. He never put on airs, even though he had a right to. Do you know what I mean?
Yeah, absolutely. And I think that good balance. I just watched the Berkshire Hathaway annual meeting, and I'm not all the way through it yet, but I've been watching those throughout my entire investing career. And this was the first annual meeting without Charlie there, and he was definitely missed.
Yeah. I think especially for trading and the complexities that are legitimately here, what you do, how you do it, Chris, is building a bridge over that chasm for people that they wouldn't otherwise be willing to go. I think it makes people feel less intimidated when they have a teacher such as yourself who keeps it, very authentic and down to earth. So thank you for doing that for all those traders' sakes. I want to thank our sponsor, Centerpoint, for sponsoring the Wall Street Coach podcast. And if you're ready to experience 60 days commission-free and their exceptional customer service, then please use our link to check them out. Now back to our podcast. So tell us a little bit. We're going to speak specifically to a short 15-minute video that you recently put up on X. I was enamored with it. You really speak to like how you frame a trade. We're going to dive deep into that, but I would like my listeners, if they're not familiar with you, to understand like why should they listen to you? What has been your experience with the market? Just give us a sense of what got you interested here in finance, in trading in the first place.
Yeah, absolutely. So it all started with I read a book called Money Master the Game by Tony Robbins. And that was I had been interested in business and entrepreneurship and things like that, but that was my first real insight into the world of finance or investing and kind of that like corner of business. And like once I really, went through, it was kind of the book is set up almost like the Market Wizards book, where you have a lot of different people talking about their best ideas in finance, how they became successful and everything. So once I really came across that, there was just no looking back. Like I found like I opened a door that I was supposed to be in, and I just felt so comfortable with it. I felt so like it just made so much sense to me. But it's very overwhelming. So I learned several different styles. I got involved with speculating first. And that was in 2016, early 2016 or late 2015. And speculating, I always say that it's a little bit different. So, you have day trading, you have investors, and then kind of somewhere in the middle, you have speculators. And that's someone who really studies like the fundamentals of a company. They study market cycles. And then they also study, risk, reward, probability. They study, options and everything else. And basically what a speculator does is they take all the variables that they can get their hands on and they say, when this is all said and done, will this have a positive result? And so kind of, it can be like all or nothing kind of bets, but as long as like the math is in your favor, it can work out. And so I initially started speculating, and then I really went down the value investing road. So that was kind of the next venture that I started studying for a couple of years, and that really help me to understand the fundamental side of business investing. And then after that, I got more into options. And then after that, I was, more on the day trading side. So I've been around several different corners of, the markets, and I just really enjoy studying it. And I'm a student of the market. And if I can, help other people to understand the concept or to just, trade alongside them, I really enjoy that.
Do you have a preference of the different styles you've studied, or are you quite happy, going in and out of the different styles?
I do like going in and out of the different styles. And a lot of it's kind of dependent on not only market conditions, but also, personal situations too. So I feel like there's phases in life where it makes more sense to be an investor, a long-term investor. There's situations where having some more control with the trading makes a lot more sense. And then there's circumstances where speculating or where you come across a special situation where, you can't control risk that well, but the payout and the probability is so good that it can still be a good opportunity. And so I'm like constantly trying to calibrate to the market. And then I just reach into my like tool chest and I pull out whatever tools I think, I can do something with.
Wow. So great for you to have the comfort of being able to pull out those tools. What created that ability to determine, were you clear at a particular style and you were okay to move on to understand and or master another style? What kind of ruler did you use for yourself to determine that? I see that with traders who, if market conditions change over the years, that, especially perhaps if they've come in for a few years with one style, and then is it appropriate for me to learn a new style? Am I going to miss what I currently know? So how did you handle that for yourself? Was it just your curiosity got the best of you? Just kind of curious.
Yeah, well, I think it was a couple of different things. The first point I would say is that I honestly think that almost everything in the markets is somehow connected. And so if you kind of go down a rabbit hole, deep enough, you'll eventually run into like another tunnel or like, it'll overlap with something else. And so I think that as long as someone is studying the markets and if they're trying to expand their knowledge as well and always learn new things and to be a student of the market, I think you almost initially or eventually just you like explore the entire room. And so I think that that's one way that I got familiar with several different styles. And then the other way was when you run into roadblocks or when you experience failure or when something goes wrong, you're like, this was a hole in the armor. And now I need to fix that. So let me draw from this other style that's really good at dealing with this problem, and then kind of taking that and then patching it over. And so I think it's just a combination of like, exploring the markets and knowing that everything is connected in some way.
Mhm.
And then the other part is just when you need to draw, from a different style because they do something better than another style, that can help you to be a more well-rounded trader or investor or speculator. And I almost use the analogy of it's like mixed martial arts, how, early on in like the UFC or anything like that, you had many different martial arts all competing to, see which one was the best. And what they found out is that the people who were well-rounded were the people who became champions and the people who were able to do that. And now everyone trains, for, ground game and stand up and grappling and all these different things. So I kind of view it the same way in the markets.
It's such a great metaphor. I love that. All right. So there's how I frame a trade. Let's have you really, if you're willing to break it down, and what about this makes it so unusual, in my opinion, is just how incredibly applicable it is to whatever style you're trading. What else makes this so unique? This framing that you're going to
Yeah.
expand
So
on.
part of, moving between different markets and different strategies, I really had to come up with a way of, what were the common denominators? What was common between every single style and what always applies to basically a trader, an investor, or anyone? And then, you can refine and you can tweak things a little bit, but like what was like the core of that every single person, every single trader needs to think about? And I just came up with risk, reward, and probability. And basically, if you have those three things, you can frame a trade in any market, in any style, any situation, can help you adapt. And it's basically like, the trinity of trading. And so that was kind of the idea of, how do I move between these markets? How do I move between these styles? And it was by always having those three things in mind. And so, for instance, I'll just kind of compare how like a speculator might use that versus how an investor might use that versus how a trader might use that. So an investor, someone like Warren Buffett, when they're looking at an investment, what they're really doing is seeing, okay, is this business understandable? Does it have good economics to it? And can it basically be an incredible business for a very long period of time? And then if I'm right initially and I sink in my capital into that, I get infinite upside. And so, something like Geico or something he's been in for, 60 years, he might have paid a couple of $1 million for it, and it's probably worth 50 or 60 billion now. And so the way that he's approaching that risk, reward, and probability is what is his risk? And so that would be the initial capital that he put in. And if everything went wrong, maybe he could get 25 or 30% of his capital back, but there was significant risk with any business venture like that. And so you kind of have to size your bets accordingly. So saying, if it's possible that this can go down by 50% or 75%, I need to make sure that my reward is so great that it actually makes sense to do it. And I also need to make sure that even if it looked like a great thing, but it fails, I'm still personally okay. And so that's his risk with it. And then the reward is basically, if I'm right on this, if this works out, the upside is so massive that the upside from that can erase mistakes from many other failed attempts. And so, he has his risk, he has his huge reward, and then probability is how likely is this to play out? And that's where his business acumen and things like that come into play. Why is this a terrific business? Why does this have great upside? Why does this have limited downside? Who are the people running it? How long can this basically go on? What's the moat around it? And so for like an investor, that's how they could use that risk, reward, and probability calculation. And then for a day trader, you might have someone who's, has a stock that went from 10, it just flushed down to 5, and that's a big support level. And so they're like, okay, I'm going to enter a long position at that 5 level, and I'm going to risk, say 50 cents per share. But I think it can bounce, $2 per share. And so, I have a 4-to-1 reward to risk there. So my risk is capped. My reward is, I know that it's multiples of my risk. And then, it's up to the trader of how skilled are they at determining why is this likely to bounce? What are the conditions that make this bounce? Does it have heavy short interest? Was it a breaking news that is later refuted? And so, that's a situation where a trader might use risk, reward, and probability. And then a speculator, say it's someone who's financing a mining company or someone who's investing in a very cyclical asset where they're saying, I think that the price of gold is going to go up 30% this year. And if that happens, I think the price of this gold stock will triple. And so if I'm wrong, maybe I lose 50% of my capital and I size correctly for that. But if I'm right and this plays out, then I could get multiples of my risk. And so that same process can be used by traders of any style, any market. It's the same with an options trader saying, what is my risk on this options trade? And, what's my risk, my reward, my probability? So basically just framing anything that you do with that, triad that can really help to, make sense of your expected value. And all that expected value is, it's kind of thrown around, but here's the essence of it. If you were to do something many, 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 many times, what is the net result of that? Is it, overall a really positive thing, or is it a negative thing, or is it a neutral thing and it's not really relevant? And so risk, reward, and probability in all different types of markets, and then that plays into your expected value equation. So at the end of doing this activity many times, is it positive or is it negative?
One of the things that you said, even as you put this, short video out there, is that, in such a short amount of time, this nice overview that you give us, that you just gave us now even, is something that does seem to perhaps take some traders by surprise, right? Because they happen to live often, it seems, in the weeds of their trading. So on one hand, it seems such common sense that this clarity of framing a trade or checking yourself up against this criteria would be just, common knowledge or common sense. But, like they say, common sense is not that common. What do you think stops traders from pausing to consider this basic frame with how they're operating? What do you think stops them from doing that?
Yeah, I think that this applies to trading and in many areas of life, is that there's so much information out there that an underappreciated skill is how to prioritize that information. And so, for a trader who's learning, they're trying to figure out, how do I place a trade? What's a brokerage? What's a stock? What are candles? What are patterns? And they get all these, different things, and they're kind of on equal importance at the beginning. And then you become a little bit more experienced and you kind of know these things, but then you have to really prioritize them. What is like a secondary thing, or what's like, a cool tip or trick, but it's not a core of your trading? And what is like a foundational, fundamental principle that you really can't live without? And so that's really what the process was for me. And, kind of just exploring this framework and really taking it into my own trading. It's, if I just strip away everything else, and if I just had, that idea of risk, reward, and probability, I'd still be on a good track. And then, the secondary part is, okay, once I understand risk, reward, and probability, now it's time to optimize.
Yeah.
And so that's where you can really get into the, back into the weeds by saying, for risk, there's just, you could have books and, hours of conversation about so many aspects of risk. And the same goes with reward and with probability. And so it's just really helpful to at least have like the framework. And then from there, if you take a trade, or if it goes wrong or if it goes right, when you're reviewing it, you can just look at it in that way. So you could say, how could I have lowered my risk on this? How could I have raised my reward? How could I have raised my probability of being right in the future? And you basically just keep going around that framework in whatever style that you're doing, and you're almost guaranteed to at least understand it better. And then, you have to be able to execute on that as well. But yeah, I think the ability to prioritize information, because there's just so much. And that's where, having someone with some experience, or talking with people who's, been through some of the sorting process, that can really help traders.
Yeah, for sure. And you've been doing this now at IU for how long?
I've been trading since late 2015, early 2016, and I eventually wound up at Investors Underground when I was learning more the trading aspect. Because again, I feel like I went backwards from what a lot of people do. A lot of people are traders first, and then, their account grows or something. Then they're like, okay, how do I learn a little bit about investing or other things? Where I had it totally reversed, where it's like, almost like a hedge fund manager might be thinking about like asset allocation, investing, fundamentals, and then getting deeper and deeper into like the short-term stuff. And so, yeah, it was just kind of an odd process of that playing out the way that it did.
I wonder if there is a bit of an edge to that, though, coming in differently than everybody else. What would those hedges be? What do you think you see that perhaps is a little different, or you feel comfortable with that perhaps traders who start out as traders don't get to bring with them?
Well, I think that kind of looking at things from like an investor's point of view or even a speculator's point of view, that can apply a lot more in real life. So what I mean by that is like if someone's looking at, buying a house, or if they're buying a private business, or they're weighing, making a large purchase or selling something, you're using the same kind of framework that you would with like business investing. And that's a big benefit for just kind of like financial savviness in life. But trading or day trading or options trading, it's so specific that it takes a lot of work to really like master a skill set like that. But it's not always the most applicable to other areas of life. And so I think it just kind of depends. I don't think that there's really a right or a wrong way of which way would be beneficial to start with. But I think that everyone should be at least familiar with the core aspects of the different disciplines, and then lean into what you're good at, lean into what you're interested at. But I think that at least having some exposure to it and branching out, I think that that's a very positive thing.
Yeah. How long have you been working, as a teacher and mentor in IU Investors Underground?
So since last year, so 2023, and I went to a Traders for a Cause event with Nate, and I had been in the room for a couple of years before that, maybe since 2021 or 2020.
Okay.
So I had been exposed to kind of like their style and just Nate's read on things and the great traders in there. But one of my friends actually encouraged me to go to a Traders for a Cause event in Chicago, and that's where I've been based out of. It was just a pop-up event, and he's like, "Hey, I think this Nate guy is going to be in town, and this Lance guy is going to be in town." He's like, it's a $60 ticket. You're like risk reward probability. It's like, what do you have to lose? Like, go meet these people that you admire. And so, based on his recommendation, I got that ticket, and I just ended up talking to Nate for a very long time there. And I think we clicked, and we understood that we wanted to do some work together, and so we stayed in contact, and then it just kind of went from there.
That's so awesome. I hope you took that friend out for a really good dinner.
Yeah, definitely. That was on Trading Takes, the podcast that I do with Sam and Judah. They always talk about, what was the best purchase for under $1,000 you've made recently, and I always say, that Traders for a Cause ticket. I mean, something like that. It can change your life. It can open up so many doors, and you just have no downside to it. So whenever I come across opportunities like that, I'm definitely going to be taking advantage of those.
Yeah. I think having the exposure of community, having people that get what you're into, enjoy what you're enjoying, it can just elevate just our, sense of joy, happiness, not feeling so isolated. I think a lot of what all traders are up against is the isolation. And so I'm really happy you said yes to that friend, but I could understand how easily you could have said no, right? So good
Yeah,
for you that you did agree to your good friend who saw that and said, hey, go. It's
yeah.
powerful. It's really powerful.
Yeah, and it's made a big difference too, because I was a very like solo trader where like I would watch a lot of people or things like that, but I was never one to be like, oh, let me find other people to collaborate with or do whatever. I was more like, I just want to see people who are really, really good, and then I'll take whatever ideas I can from them, try to patch them into my own trading, and that was it. And I was comfortable doing that because, believe it or not, I'm actually a fairly introverted person sometimes. Like I'm okay with just like very deep, solo, focus, and like, diving into the markets and things like that. But you almost just don't even know what you're missing until you experience it. And so once I got involved with like a broader community and in a much, larger way than I was before, it's incredible. And you meet these great people and you learn so much. And it's something that I didn't even really know was missing. So I'm very grateful for that.
Wow, that's beautiful. I'm curious if you've seen that impact how your trading is, how all of the different, areas, like even your investing, do you see the benefits even to them having this really new kind of relationship to how you do all that you do because of this community effect, because of the friendships, the encouragement, enthusiasm, so on and so forth?
Yeah, you learn so much from just talking to someone that, even if they have, let's say there's a great trader and they have 5 ideas out there that like are kind of well known, that's what they're known for. Those are just like 5 of their 100, 50 ideas that they have going on in their head. And you kind of you don't even realize like how much they know and like the thought process that goes into those like main, public things. But it's definitely helped with my trading. It's helped me to understand things so better. And we talk about like everything being connected in the markets, and then you kind of find your discipline, but within that it's like you can get so specific with things. So it's like, okay, someone's an intraday trader on the long side, and they use moving averages like Judah or someone, and you get so specific with things that you just find out how many different ways people can make trading work. And it's a very hopeful thing, because if something's not clicking, there's another way to do it. There's a million ways to do it. So just like talking with people and exploring those ideas, it's a great way to not only like learn more, but also to get exposure to what could be really good for you that you don't even know about yet.
I want to thank our sponsor, Centerpoint. That is the trading platform where active traders thrive. And if you let them know you're coming from the Wall Street Coach, we're putting a link right here just for you. You'll get a 60-day commission-free experience with them. You have those 3 broken down: risk, reward, and probability. You said, I'm pretty sure in the risk section, you talked about, if I lose $1,000, and knowing that losing $1,000 puts me in a very bad mood, you said that it is not going to be an appropriate risk for me to take. The reason that really stood out to me is I also feel that point of view, or that self-reflection, is not done as often as it needs to be done. That sense of, I am going to be emotionally, losing mental capital, or a sense of perseverance, because I'll feel my knees have been, cut out from underneath me. Talk a little bit about that, what your opinion is on that, and again, how a trader might perhaps keep more self-awareness of the importance of the impact certain choices they make when they take risk is going to affect them.
Yeah, I think that's a very important idea, because when traders are so focused on the markets, you almost can fall into this trap of thinking that the market is the only thing, the only moving variable in it. And it's really not. It's, your state, your thought process is just as important to the success of your trading as the strategy that you're using, as, your risk level, as things like that. So really just understanding that everything is connected. You are connected to the market, with the way that you live your life. Like it's all, touching one another in some way. And so I think a good way to like build that self-awareness is, when you're having strong emotions, just jot it down on a piece of paper, come back to it later on. But let's say I had like a rough day in the market. Let's say, I'm just really upset. It's just like jot down that, I'm upset, because this trade went bad or whatever. And then, take a walk or come back to the idea and try to untangle it and be like, why was I upset? Well, was it because the trade just didn't work? It's like, well, trades don't work all the time in trading. So it probably wasn't that. Was it the amount of money that I lost? Well, maybe it was. And maybe I had a sizing issue with that. Or was it that I've had a bad week and I was kind of hoping that this trading would go well, and I was looking for like, a positive experience. And it just like, I was already down and this thing like kicked me in the shin while I was down. So it wasn't about the money. It wasn't about that. I couldn't handle another rejection or another failure like at this point in the week or something. And so just like jotting down what brought out a strong emotion and then just reflecting on that. And then just as you go throughout your training career, or anything, you're just going to pick up these little tidbits and it'll help you to become more self-aware, and you'll kind of like gather those over time. And so when something does go wrong in the future, you don't even have to think about why you're upset or why something went wrong or why you're really happy. You'll just be able to kind of know, like, because you've thought about it in the past, that it was likely something related to this. And then if a string of something's going wrong or just like a series of bad events, you can really pinpoint that and fix your process. Or if things are going really great and you're like, this is the happiest I've ever been. I'm trading okay, but I'm just super happy. Then, making note of that, it's like, well, why? Was it because I was very calm while I was happy? It's because I have great things going on in other areas of my life. And so just like treating it as, it's like a car and a driver and not just one to win a race. So that's been helpful for me.
It's so articulate with the way you described how it's so powerful. When you first started, 2016, is that correct?
Yes.
Do you think you were doing this for yourself?
In some ways, well, not what we just described, more
Yeah.
just getting interested in the markets.
Yeah.
I was very interested. So yes, that was for myself. But I will say that over time of changing styles, many of the motivation for those changes came from a situation from somewhere else in my life where I had to learn a different style because I had to help, a family member or, something like that with
Yeah.
a financial decision, or because what I was doing in this market wasn't appropriate for someone else in my life. And because I wanted to help them in some way, I had to adjust and learn a style that would work for them and for me. And so, yeah, I think initially I got interested on my own, but if you do anything that you're very passionate about, I feel like you could always tie it into other people and always use what you're doing for good in some way. And I actually had another friend. So when I was getting very interested in finance and investing, I had a conversation with one of my other great friends. And I said, I'm super interested in this, but I feel like it's just a kind of a shallow pursuit to pursue something in finance, to, something in trading or investing. And I feel like it's just not that meaningful. And I don't want to have a lot of regret where I really pursue this. And, I'm like, I look back and I'm like, all I did was trade or invest or do something. And he just gave me the best advice. And he said that, the result of your efforts, whatever they are, that can be used for good. And that really struck me that, regardless of what I'm doing day to day, the results of your effort, you can use that for good. And so many people struggle with things like, with money, or, even look at things like Traders for a Cause, where, I mean, that's kind of the whole point of it. It's people who, want to contribute and want to do something good. They can use their financial resources or their skill sets or their business acumen to help, someone who really needs it. And so I feel like even if you, start out something in a more self-focused way, you can always branch out. And I think until people branch out, you're missing out on so much. And I think it's hard to find fulfillment if you're constantly just focused on yourself. So that was it for me.
Yeah. And for one of the things that you have in your educational background is your business and psychology, and also that you hold an MBA. So of all of those, I'm kind of curious what and how, having studied psychology, facilitated your success in these multiple arenas of trading.
Yeah, so I have to say in school that psychology classes were always my favorite, always. More than business, more than anything.
Wow.
And I actually, when I was initially in school, I was like, maybe I'll become some kind of a business coach or, something like that. Because I was like, how do I use, psychology, something I'm very passionate about, in like the business world? And then I came across, investing and things like that. And I was like, I like that even more than psychology. So, but I definitely use it. And I think that having some familiarity with psychology of just, how do people think and how do I think? And, what are like the commonalities between people? Just kind of getting like a broad understanding of that. It's hugely important. And so even ideas like that are, more basic, like Maslow's hierarchy or something, where it's like, satisfying your basic needs, then going up to your social needs or your esteem needs, and you kind of go up. That's like a system of prioritizing. And it's like you can use that in many other areas. So just like taking these ideas from very intelligent people who've broken down what they've spent a lifetime learning into a couple of, concepts or ideas, and people can pick up a $10 psychology book, and you can just learn these, hugely valuable insights with, again, you have no risk to it, and you have, huge reward and a very high probability of getting those rewards too. So yeah, I really love psychology, and that's definitely helped me in many areas.
If you're open to it, I'd love to hear where you found your own, uh, emotional hangups with trading, because of you're probably a lot more fluent at being self-aware and being able to talk about what you feel, how you feel. So when you have had the market really push back, especially in the beginning, was there were you able to kind of notice yourself being triggered when you were being triggered? Or did that take you a little bit of time to realize, oh, this is a trigger emotionally now I'm being hit with? So just talk a little bit about that if you're open to it.
Yeah, I would say that a lot of times it was after like a massive drawdown or like a failure or something really going wrong. That's kind of where you see all the holes in your strategy, or the shortcomings in your own emotional state. Because something that I was really kind of confused about, or something I didn't quite understand earlier on, is when people talked about emotions in trading, I thought that it was mostly referring to fear. And it was people, being afraid of losing money, or like, oh, I can't risk this. And I really never had like the fear gene with that. Like, in fact, that is something that has hurt me over the years in some ways,
Wow.
because I can be like, as long as it makes sense, like I almost don't think twice about things, and I can be more aggressive than is reasonable to be.
Mhm.
And so when something doesn't work out, you can really take a large hit even if you weren't afraid going in. And so respecting the market and having a healthy level of fear, that's actually a net positive. Where before I was like, people were talking about the emotions in trading. It's like, oh, something goes down, so you sell. And it's like, I almost had the other side where it was, I don't know if it was necessarily greed, but it was definitely aggression, with just, position sizing, with conviction, with everything. I was like, I've studied this, I know this. And you can be so convinced about, all your research and everything. It's like, the market doesn't have to do anything. It doesn't matter if I spent 50 hours studying this thing. It can do whatever it wants. And so it was more in those moments where, I gave it like everything that I had, and it still didn't work out. Those were the moments where I was like, I need to look at other emotions within myself. And, if something went wrong, I was like, well, I'll be even more aggressive on the next one. I'll study even hard. I'll do these things. But it was really not, I wasn't getting to the root of it. I was just kind of, leaning into my emotional weakness rather than recognizing that it was an emotional weakness. So coming back to a more balanced place, definitely a lot of challenges and failure, like throughout like the journey and everything, were things that really helped me to think about those.
You may or may not want to share, but as you saw that about yourself, how did you begin to integrate that awareness? What steps, specifically did you take so that you could, perhaps have some distance between what shows up and how you react to it? How did you get yourself to that response as opposed to reaction? As you continue to grow and get better.
Yeah. I think recognizing the need for change in a calm way was what really helped me. Because before, if something went wrong, I would just have this other emotional reaction of like, I'm just going to overcome it, as opposed to,
Mhm.
there's something wrong. I need to recognize that something's wrong, and
Mhm.
I just need to implement change. I don't need to get down on myself. I don't need to beat myself up. I don't need to be super harsh.
Yeah,
I just need to change.
yeah,
And I can do that in a healthy way, in a way that, that people are deserving of. It's like, you have to be compassionate to yourself, because I feel like we sometimes treat ourselves in ways that we would never treat other people. And we think that it's okay and it's acceptable, and it's really not. And, you can feel that same pain from, being too harsh on yourself. And so it was actually something that you said at Traders for a Cause that really made that idea click. And that was when, instead of when something goes wrong, saying like, how could you do this again? Or why would you do this? It's saying, what was that all about? And that was a hugely transformative moment of, those things that I've been working towards. I could finally have a phrase or something that would make sense of that. And so thank you for that idea, because now when something is going wrong, it's what was that about? And I just don't have to be, super harsh to get that answer. I just need to, healthily, make change in a healthy way. And that's just so much more productive.
Yeah, it's so beautiful. I'm so happy to hear that. I did not see that coming. So you got me all teared up here. So thank you for telling me that. And I'm so happy that that is something you heard and took to heart, because, taking those things to heart can change. It can change everything. It's changed my life. These things I shared, just so you know, like I needed to hear them too, man, because I was really hard on myself. So, I think part of what I hear in the way you speak is I hear your compassion for yourself reflected, or at a minimum, your neutrality with yourself. What I mean by that is I don't hear this judgment. I don't hear self-judgment. And that I really feel is what informs your ability to communicate the way you do. Does that make sense?
I think it does. Yeah. And thank you for that. And yeah, because I feel like when you are able to stay calm and you're not like constantly bouncing between like super happy, super sad, like all these things, it's like when you're able to remain calm, you're able to think very clearly about stuff. And so instead of like over focusing on one area that isn't actually fixing it, just like remaining calm in like the situation and then just getting to the root of the problem. And like, whether it's like that, the framework of risk, reward, probability, it's like people don't know where to start.
Yeah.
It's somewhere in there. Start there, start somewhere simple, and that's at least you can review your trading. And then after that, you can branch out into yourself, into the markets, into strategy and everything else. But it's like if people are lost, just start somewhere simple and just work on it a little bit.
Yep. I think it's but I almost wonder, Chris, if this, when a person has done the work on themselves, when a person has been able to talk to themselves like they would another person, then I believe they are embodying that quality when communicating to others. So
Yes.
it's like, because you are doing it with yourself, you are somehow, even without articulating it, teaching those that listen to you to do it too.
Well, that's very kind of you to say. And I hope that that is the case, because I say with traders a lot where um, you have this kind of like dream career and this thing that you love to do.
Yeah.
And how many traders that you come across are just frustrated and angry and like, and oh, almost every single day. And even if someone had 5 great trades and they had one, neutral trade, they're like, oh, well, that I should have done this. And it's like you do that for day after day, year after year. And it's like you spent so much of your life just in a state that was not only not productive, but harming you.
Yeah, exactly.
So yeah,
So,
I just think
so hard on themselves, so hard on themselves. And it's so costly,
yeah.
yes, monetarily too, but like their hearts, their bodies, their spirit, like all of these are places that they're gonna pay a price eventually for. And it's just those inner critics, inner gremlins that just are like, with driving their bus left and right off a cliff, it's like, yeah, it's concerning, worries me.
Yeah. Yeah. And it's such a privilege to be a trader. I mean, it's truly just, it's like, so if you have this wonderful thing, it's like, try to do your best to make it be a wonderful thing and not like spoil a wonderful thing.
Exactly. Exactly. So I have lost track of time because we have a Twitter space, everybody, and we are a few minutes late. So we're going to pause this here. Be sure to listen to part 2, which is going to be on the X space, everybody. Chris, this was an amazing interview with you. I hope you'll let me have you come back. Okay.
Absolutely. It would be a
Okay.
privilege.
Okay. Thank you,
Thank you.
everybody, for watching the Wall Street Coach podcast. And thank you to Centerpoint, our amazing sponsor.